We are here tonight with Nicholas Gibbs, who will pronounce and give us exactly what he thinks after today's consolidation, after the massive run up yesterday. And maybe he'll give us a hint as to the weird action this morning with the big drop and then the V-shaped recovery, but maybe not. Take it away, Nick.
Thanks, Randy. Hey, let me just do a quick selfish plug. I meant to do this last time and I
Oh, that's
didn't.
true. Yeah.
Yeah, I'm sorry. Everybody, if you are interested at all in options or anything and you know anything about me, send me a DM. I'm doing a course on December 20th. That's a Saturday, December 20th. It'll be about 6 hours long. You don't need to know anything about options. If you're interested, I'm literally going from start to, I guess you never finish learning, but from you don't need to know anything to showing you by the time you're done, you will understand how options work. You'll understand my trading strategy, why I make the type of profits that I make. If you guys have seen, I share once a month publicly what my P&L is, and then with my subscribers, I share frequently.
It's
But
it's a lot. That's a lot.
yeah, yeah. So if you're interested, send me a DM. I don't accept everybody. I want to make sure people have the right mindset. This is not a get rich quick thing. This is about education and learning. You're responsible for your own decisions, but if you're interested, reach out to me. With that said, Randy, let me answer your question. So I have a lot of thoughts. So let me adjust myself here.
Sure.
So in a we are in the same market we've been in all year. Let me put it to you that way. And what is that? That is a market, a stock market that is highly volatile. And people like myself, who, again, I guess keep same thread, who trade options, we like volatility. We do really well in these environments. We make a lot of money. And so I think we have, people like myself have a unique sense of what's going on and a unique ability to maybe see things that other people don't see. So right now, I think besides today and yesterday, I would say a lot of people are freaking out. A lot of people have been thinking the AI bubble is popping. I mean, we've heard nothing short of that. We've heard of liquidity issues in the private market. We've heard bad lending. We've heard all these AI companies going to debt markets. We've heard fraud accusations, false depreciation. I could go on. We've heard all of this. It's all BS. It's all BS. Um, is there some things that, maybe don't seem too kosher, like a OpenAI who really doesn't have any profitable revenue and they are highly valued and maybe trying to go IPO and they are kind of over their skis with valuation? Sure. But they are the outlier. They're not the rule. And as I've been saying for, gosh, what, about 6 months now, I don't think OpenAI will be around much longer. You guys can go watch. I had a Meet Investing. I had a interview a couple weeks ago. I said the same thing. Funny enough, that idea is starting to catch steam in mainstream media. I would say, all in podcasts. They talked about it this weekend. So I think they might be ripping off some of my ideas.
Are
I'll
they? Are
take
they,
it. I rip
they've been
off plenty
listening?
of theirs. Yeah, it's all right. We share ideas. I learn a lot from them. So every once in a while they pick off one of my things. But we the market's okay. Most of these companies, whether it's a Meta, a Microsoft, an Amazon, a Apple, a Nvidia, a Tesla, an XAI, they have other revenue streams that are profitable that will fund what they're doing. Worst case scenario, they made a bad investment. It has nothing to do with their underlying business. Everything's fine. But with that said, we have four companies now valued at $4 trillion, Randy. Four. Okay. This is telling you that we have a market where there are big winners and lots of losers. Very few winners, lots of losers. And in this type of environment, especially when everything is getting really hyped. There's a lot of talk about AI, about the promise of it, productivity, crazy amounts of investments. You're going to have these people who try to call tops. And you're going to have these people. When I say people, really what I'm talking about is Wall Street, hedge funds, the Michael Burrys of the world, who are trying to catch the other end of the trade. They're trying to be a contrarian to a very strong bull market that's arguably the most hated bull market we've ever had. And they're trying to catch a top, and they can make noise. And that's what we see here. We see this tug of war between bulls and bears, between short sellers and long-term value investors. We see it. It's there. And there are scary things going on out there, Randy. We have the Fed indecisive as hell, right? But not really, right? I told you this would happen a month ago, right? Remember, I told you
Oh,
that they
last
would come
week.
on, they would
Last week.
cut.
Last week.
No, but before the
Oh,
last rate cut, I told you
oh,
that they
yeah,
would
yeah.
cut and they would be very hawkish, and they're going to do that to stymie the market. And look where we are now. And I told you last week it's 100% they're going to cut this. And now look at this. The odds went from sub 50 to what, 80% now.
Yep, yep.
They're cutting, but that chaos creates turbulence in the market. You take that, add in a little Michael Burry, not understanding how these data centers, how these chips are used, and the longevity that they get with out of them. You start getting all of this, and it's the best thing you could ask for, especially even if you're just a long-term investor. It's the best thing you could ask for because it creates that fear and that conservativeness that you want in a bull market. Because when we don't have that, you have crazy animal spirits. You have nothing but euphoria. You have FOMO. And so I think, a long-winded way of answering your question, I think what's happening here is that we just had a normal, healthy 5% pullback, right? We had a 5% on S&P, about 9%, very healthy on the NASDAQ, and that's healthy. We get these several times throughout the year.
Right.
And what happens? Everyone buys back up. Everything's good. And we continue with our lives, right? We had it from in April, it happened. We saw it again whenever we had the DeepSeek scare. I think there's one other one that happened not too long ago. And now here we are with a depreciation scare, and a Fed isn't going to hike, and a private market liquidity issue, and the government shutdown, right? And everything else you can throw on there. But fundamentally, Nvidia's business hasn't changed. Tesla's business hasn't changed. Google's business hasn't changed. Amazon, Apple, Microsoft, you can go on and on. These are healthy companies that have very profitable businesses outside of AI, and they are the ones with staying power, talent, and ability to actually figure this out and take a shot at making a once in a lifetime bet with these investments. This isn't the metaverse. This isn't some crypto coin that you're going to put money in, just sit there and hope that eventually everyone adopts it. No, this is real. This is tangible. And this is going to change the world. It is already changing the world, just maybe not in the way Wall Street wants to see it today, but it is already. From driving, obviously, many people here are Tesla investors. We see that. Most of us don't drive anymore. But to how many people use Google anymore rather than just going to a Grok or a ChatGPT, right? How many people are actually writing their own emails anymore? How many people are just kind of writing almost cliff notes of an idea they have or something they want to do at work, and then they put it into Grok or ChatGPT and say, hey, make this better, make this sound more refined for, right? It's taking a lot of that lift out of it, out of what people have to do on day to day, making presentations, making documents, helping people do research on deeper topics, helping understand little nuanced topics that maybe you wouldn't have understood otherwise, right? So AI is having a fundamental change in how we operate and how we move throughout the world. So it is here, but Wall Street is going to have their own say. And I think right now what we're seeing is the trend being bucked. I believe we bottomed. I believe, especially because we're going to have a Fed rate cut, we are on the precipice of a Santa Claus rally. It might have started yesterday. It's continuing today. Look at Meta. Look at Tesla. Look at Palantir. These companies are boom. Even Nvidia today, there's yet again, everyone's trying to make Nvidia like the bad guys, right? Yet they are just a solid company, printing money, honest, straightforward. Everyone needs them. And the best thing that, or the best counter to them people can get is, well, Google might start selling their TPUs to Meta, and that would happen in 2027. Okay, well, I think
Maybe.
we're in a pretty good space. So I'll pause there, but
Sure,
those are
sure.
just kind of
We'll come back to that in a second. First of all, I want to
ideally.
ask you. First of all, I want to ask you is if that the you just talked about the world changing, so it's going to change for companies. It's going to change for individuals. It's going to change for people who work for a living. It's going to change for people who have stock investments. It's going to change for people that are trying to figure out the economy, make decisions about how to vote. And can you think of any better way for those people to become informed about what's coming than maybe some book that you participated in?
It's weird you just said that because you happen to have this a very interesting book that might help over your left shoulder. I heard it's pretty good. I mean,
This is
I
what it's,
heard it's an Amazon top seller.
this is what it is. This is what it is from cover to cover. We're talking about how it's going to impact you. If you're just an investor, maybe you're retired and you're just investing and that's why you watch the show is because of that. Maybe you're a Tesla investor, but there's way more to the markets. There's way more to the economy than just Tesla. Maybe you're an employee or maybe you're not an employee anymore, but maybe your kids are, your grandkids are, or maybe they're in college and they're just coming out. Everybody needs to read this book. I'm sorry, I'm pitching you. You just pitched your program on Saturday, so this is the second pitch. Um, uh, you should go if you're interested in options. You should definitely go hear his deal because he's making bank. And if you're interested at all in the future and what's going to be happening, you have to read the book. All right, let's get on. Let's go back.
Just real quick,
Yeah, yeah.
as far as the book goes, like what I think is brilliant about the book, and obviously I'm biased here, but is that it's not just one person's opinion. All right, we have from people who have started up multiple companies, multimillionaires, the professors, doctors, people who have been in multiple engineering roles in different disciplines, like people who have were there at the beginning of Siri, right? So many people have contributed to this book that it's honestly a class of its own. It's very rare to get such a dense cohort of people together to sit down and write something and not sit there with a shared worldview necessarily, but everyone's kind of putting their own bend on it and what they see on a topic that they find interesting they want to write about. And so it's very this is a very unique book. Again, I know I'm biased, like don't buy it if you think that we're just pitching, but like it is a fantastic book and I can't recommend it enough.
All right, so let's start. Not start. We'll come. I'm going to start now on some general stuff that I've been thinking about. All right, and so
Let's talk. Let's do it.
I love the optimism that you just talked about in terms of the markets, in terms of. Uh, but I want to talk about this is kind of a thing that's been bugging me just a little bit. I've been thinking about it for months, and then somebody else actually mentioned on X yesterday, and I was like, no, I got to bring this up to Nick. All right. Tesla is at 7 billion in earnings right now, 2024, right? Probably about the same this year. That's number 21 among all publicly traded companies. That's pretty darn good to be number 21 among all publicly traded companies. But it's only about 7% of Apple, but the stock is about 33% of Apple. Now, once robotaxi really starts ramping out and we get to the street begins to see that maybe we could actually get 100,000 of these vehicles on the road by the end of next year, then that adds about 4 billion. If you add in another 3 billion incrementally for the energy expansion, the energy storage expansion, which I think is reasonable for next year, and I think the street will be able to see that. And then for just for giggles, throw in another $1 billion for the auto increase, the increase in sales that Elon just said was going to happen. So now you've doubled it You've probably moved up the ladder a little bit. You're bigger, you're maybe your 17th or 16th largest, but you're still nowhere close to Apple in terms of that percentage that we just talked about. You have 15 billion in earnings, that's 15% of Apple's earnings. But you're still not, they're still, we're still at 33%. I'm sorry, they, I forgot what I just said. But anyway, so here's
I'm
my question.
tracking the plan.
Okay, so, all right, you're tracking. Okay, so could Tesla stall out at around $600 a share because this is all narrative. And what's going to happen next year with robotaxi is just going to be fulfilling the narrative. And so we may not, and now this is not counting throwing on Optimus on top as a new narrative, but let's just say that there's no such thing as Optimus just for fun. Could we get to a place where actually we're just fulfilling what everybody's expecting for next year? And so we get a stall until we actually start to see it going towards 500,000 vehicles or a million vehicles, et cetera.
All right. So first of all, you're only talking about next year, right?
Yes.
So all the numbers you threw out were for next year, right? We don't need to sit here and dive into the actual numbers. Let's zoom out and let's just think critically here. So you're talking about next year.
Uh-huh.
And mind you, you said 600, stalling out 600, which would be a 50% move in less than a year. Okay. If that's stalled, I'll take stalled every year for the foreseeable future.
All
All
right.
right. Um, I honestly don't see us going much higher than 600 by next year.
Okay.
That's literally a 50% increase
Mhm.
in a year.
Mhm.
I think that would be pretty healthy. Could it do more? Sure. But the difference between Apple and Tesla is that Apple pays a dividend. Let's put it that way. And the only reason they pay a dividend is because they don't know what else to do with their money. And they don't have the talent. They honestly, they don't have the leadership to venture into daring, ambitious ideas and just taking a shot, taking risk. They're not good at that.
Mhm.
But they have a great product that they're slowly screwing up with their software updates, but that's neither here nor there. But they have a great product. They have a great moat. It's beautiful. It's elegant. It works. And they print money because there really is no other competition. You know, it, it just is what it is. They have their ecosystem. But no one's pricing Apple for the future.
Mhm.
In fact, I would say a lot of Apple's growth in stock price, a lot of it's attributed to them buying back their own shares.
Mhm. Yeah.
So, you got to take this all with a grain of salt. So, Tesla, on the other hand, they don't pay a dividend. They definitely don't buy back their own shares. But you're right, today and maybe even next year, right? They're nowhere close to what Apple prints on a yearly basis. But with Tesla, you can see the growth. And not only can you see the growth, you see the growth with a huge moat around it.
Yeah. Mhm.
And it's happening. Like everyone knows it's happening. It's an inevitability now, and the world is slowly catching up to this. And so I wouldn't call if next year we get to 600 stalling, Randy. I would consider that a very good year. All right. And Tesla would be ahead of where it is depending on how you measure it, right? If people like to use PE, I think that is a intellectually dishonest way of valuing a growth company. But if you want to use PE, yes, Tesla will definitely still be over its skis from a PE perspective, without a doubt, right? Its earnings to its price would be ridiculous, sure. But that's only if you look at Tesla out of context. If you put the context in that they're going for arguably the first multi-trillion dollar industry to ever exist, with no other competition, with a huge moat, with an entire vertically integrated stack, with the best entrepreneur, arguably of all time, leading the company, who is financially incentivized to hit crazy milestones to get the company to an $8 trillion valuation, which might be enough reason alone for people to own it, then no, I don't think that it's crazy to see those comparisons to Apple, because the question is, what's next for Apple? No one knows. The only thing people know is that Apple will continue to buy back their stock because they don't know where to put their money.
Right.
They're behind on AI and they're not leading anything. So I hear you and I get the point of view, but if people are looking at a given moment in time, if people are looking at today, you're right. I got no argument for today. But if you take the whole picture and put it all in context, context matters. It always does.
Right.
And people
So,
don't like context.
all right. So I'm totally narrative driven in all of my analysis. I mean, sure, I look at the fundamentals. I put the fundamentals out. Every, I want everybody to see what the real numbers are going to be. But I believe Tesla is a narrative stock. I believe Elon is a narrative entrepreneur. But that's why this concept though of here's the narrative. I want to break this into two parts. Here's the narrative. The narrative is robotaxis will be a huge success and will drive the future of the company. And we've bumped up against these all-time highs a couple times because that was going to happen next week. Well, now if it actually happens, now the narrative changes. Now it becomes a spreadsheet item. It might still be how big is it going to get? How many countries is it going to dominate? How many units? How many, but that narrative starts to become reality as opposed to a narrative. And that's why I'm looking at maybe the stock price starts to be looking more at the spreadsheet rather than narrative.
This boy's thirsty for pets. Um, so I don't disagree with what you're saying there, but it's already happening. That is why the S&P can sell off 5%, NASDAQ can sell off 10%, and Tesla's still holding up at 419. All right, we were at what, 460 not
Mhm,
too long ago.
mhm,
So 460, that's what, 40 point drop.
mhm.
Like,
Nothing for
you
Tesla.
know,
Yeah,
that's nothing. I mean, if the Nasdaq does 10%, I mean, I guess it depends. If you're talking about a beta 2 stock, S&P
right.
15, so that's par for the course. But historically, when we have these type of sell-offs, Tesla's one of the ones that really dumps. And I think Tesla's holding up extremely well here, especially going into the end of the year. And it's not even just that. I don't think it's just holding up because of everything you said, but I think it's because individuals at funds, at family firms, they are actually testing and seeing the same thing that we're seeing now, right? I think 14 versus 13, the last few versions of 13, they've been a very big unlock.
Hmm.
And the problem with the narrative, Randy, is that here's what's going to happen. Mark my words, this will happen. Right now, they're not making any revenue, right? Once they start making revenue, you'll have Ross Gerber out there, you'll have Gordon Johnson out there, and all of them saying, "Oh, Tesla loses money on every single ride, whatever." And that's gonna be the narrative. They're not profitable. They're losing money. The EV business is funding their robotaxi. It's a failed business, a failed model. You're gonna hear all this crap until eventually it finally scales, and then it's gonna start to scale, and it's gonna be like, "Oh, this is a $1 trillion company, and they're only making 5%, gross margins on their." And it's okay. Well, then it's gonna get to 10%, and then 15, and then 20, and then one day it's gonna be really big, and they're all gonna be quiet until that one day where all of a sudden we go from a 70% gross margin down to 65%. Oh, what happened here? And oh, they have these unexpected expenses. Oh, there's fraud because of it. And it's going to be the same thing repeating all over again. And mark my words, that's exactly what's going to happen. But so I think the narrative is only important to those who are starting to see and starting to believe and experience. But for many, it's still just an overpriced, overhyped stock. And that's your edge. There's not a lot of edge in this market. In general, I would say there's no edge in the markets. Tesla is one of those rare companies where we get to experience the R&D in real time, and everybody can use it, but not everybody gets it because, well, you have
Right.
to buy the car, then you have to subscribe, or you have to buy FSD outright. And, you know, if you get to sit there, I mean, name another company where you get to experience the product as it's going through development.
Right. Right.
Palantir, no. Nvidia, no. Microsoft, no. Apple, no. Right? You only get it after the thing launches and after everyone got to see it at the same time.
Yeah.
But we have this like we have edge. There's no other. I can't see edge anywhere else when it comes to a product. So
Yeah.
so yeah, I mean, 600 completely reasonable next year. I I would caution people though, just because Robotaxi may launch, just because it might spread out to multiple cities, that doesn't mean the stock has to follow fast, right? And it doesn't mean the stock can't crash because of that. And so, not financial advice, but I would say be careful buying any leaps that are really far out. If you're gonna buy leaps, do it close to money. That's what I do. Buy it close to the money. That's fine. Do it when things are down. I would say now's not the right time to do it. You should have been doing it when we were at 390, 395. So yeah,
All
I
right.
don't know where to go. I
And
don't want to keep ranting.
right. Yeah, yeah. And so just to be clear to the folks who follow me so that they don't think I'm very, very confused in a couple of weeks when I'm talking differently, I do believe that there will be a narrative around Optimus next year. I believe that will cause the multiple to stay even higher than would just be justified by the $600 price. So I do have a higher price expectation for next year, but that'll be because of the narrative around Optimus. But that's going to take Optimus showing up on the factory floor and doing stuff that make you go, if it's not jaw dropping, even for those of us in the community, then it's not good enough. It's going to have to be jaw dropping. So let's move on back to Nvidia again. So you were talking about Nvidia getting smacked today because Google might steal away a piece of their business. Larry Goldberg and I had an amazing conversation last night about the popping this huge bubble or whatever, and we went back and forth about a lot of things. But one of the things we talked about was that there may be a day, you kind of alluded to it, there might be a day when Nvidia's margins are not as high as they are. They might have a day when their sales are not increasing as fast as they are. And so their earnings might not be increasing as fast. And I think this is what the street is seeing, why the street is nervous or are as easily persuaded to get out, is when they see any evidence that this is going to be sooner rather than later. And I think that's what happened with the Google announcement or what would you even call it? It wasn't even an announcement. The kind of, well, maybe someday, in the future, we might buy some TPUs. So is that how you see it? Do you believe the bubble, there's no such thing as a bubble here, or that at least it's years and years before we'll see any impact?
So, all right, so you'll have people that will say there's always a bubble. It's just how big it is. Okay. Sure. If you want to think that way, then sure, we're in a bubble. But the question is, how big is it? In my opinion, with everything that's going on, I don't think we've even started the first inning of the game. All right. So, and I don't think you'll find anyone else say that. All right. This is what I'm saying right now is not an easy thing to say in this current bubble talk. Everything's overpriced. Are there debt issues? Are they depreciating, fraud, and all that? What I'm saying is not an easy thing to say. All right. But hear me out. If you're gonna say that there's always a bubble, I think we're still warming up for the game. In my opinion, I'm not someone who thinks there's always a bubble kind of thing. My opinion is that there is no bubble, and that what we're seeing is the foundation being built for an entire new era. I've been ranting all night, but let me continue on that.
Right, go for it.
So, people need to understand that what's happening right now it's not, you're not going to see this amazing application to come out overnight that's obviously going to be this amazing profit generating thing that Wall Street wants. That's what Wall Street wants. Wall Street wants the easy button because they don't want to do homework. They don't want to understand what's happening. But what's happening right now is every single company in the world, whether it's a t-shirt maker, whether it's a publisher, whether it's a nursery, whether it's a tech company, whether it's a tax company, whether it's a law firm, every single company right now is being disrupted in some form, right? It doesn't mean like we're not going to have lawyers. It doesn't mean we're not going to have, gardeners, things like that. But their standard operating procedures internally, the way they go about doing their tasks day to day, all of that is fundamentally changing, right? From HR teams to research teams to, you know, research teams for medical companies, everything's changing because all of a sudden they have these new tool sets or they have these new automation that they can inject that's can actually reason, right? So all that stuff's happening under the covers. And Wall Street doesn't see it. It's not the sexy thing, okay? It's literally the plumbing and the electrical that's behind your drywall that you don't see. But it's the most critical part of everything within your house, right? You need your gas lines, you need your electrical lines, you need your Ethernet, you need your plumbing, you need your gray water line, your black water line. All this stuff is so critical. You need your water supply. All that's so critical. And Wall Street doesn't care about it. Wall Street just wants to see, I just want to see that fridge that's sitting there that just magically gives me water and just magically has electricity to it. That's what they want to see. But right now we are working on the foundation of everything before we can get to the good stuff, right? To the shiny, bright stuff. And so to me, we are just getting started. This is all just now happening. Nvidia is the clear leader by far. Jensen has been saying this over and over. There's no other company that designs a GPU the way Nvidia does that works for everybody, for every model, from Google to Amazon to Anthropic to OpenAI to Tesla to xAI to DeepSeek to all the Chinese companies. There's only one company has been able to kind of find a way to make this ubiquitous, and that's Nvidia. It's so rare. They have such a niche product that somehow is scalable in application. Like just think about that for a second.
Yeah.
It is so condensed and so niche, so myopic what they do, but its use, its leverage is unprecedented. Right? Look at Tesla. They build chips. They build software that's very unique, very niche, but it only works for them.
Yeah.
Right? It's a one-trick pony, but damn, does it do that trick really well?
And there's
Nvidia,
maybe the largest product in the history of mankind that will
fair.
require that chip.
But so Nvidia is not going anywhere, and demand is only going to grow. Demand is going to grow exponentially. All right, this is not going to slow down at all. The only thing that I see that will get in the way of all this will be fear like we saw the last few days, or when DeepSeek happened, they thought, oh, China is going to run away with this. At the end of the day, there's a few things that are going to keep this momentum going. One, just keeping it simple, stupid method, KISS method. It's us versus China. At the end of the day, that alone will keep things moving, right? Doesn't mean we're going to bail companies out, David Sachs to Sam Altman. We're not going to bail anyone out. In fact, we don't want that, right? We want a Jeff Bezos, Elon Musk type competition energy, right? Mm-hmm. That's what we want in America, ideally. But if China needs to be a rival, we'll take that. So that's one thing. The second thing that's going to keep this going is that we know today that this is real. It's not the metaverse. It's not some fad. It's not a gigapet or whatever other trendy thing has happened before. This is real and this is disruptive. Mm-hmm. And everybody knows that they can either be a leader in it or they can get left behind. Mm-hmm. Right? Now, the other thing that's going to keep this going is that You have a once in a lifetime opportunity. And when I say you, I mean these companies do. Look, there's only really one search engine. It's Google. There's really only two or three phone companies, right? You got Apple, you got Android, you got Huawei. Maybe you got a handful of other in China, but really you could argue there's only one because Apple takes all of the profits. Um, Laptops or laptop software, right? You got Microsoft, you got Apple. That's pretty much it. Social media, you essentially have Meta and TikTok. YouTube doesn't even have any competition. It's just YouTube. Clouds, you got essentially three: Azure, AWS, and GCP. Um, Music streaming, you essentially have Spotify. Streaming services, you got Netflix and Hulu and Prime, right? My point is, you got anywhere from one to maybe at max four companies that dominate any new technological
Mhm.
wave era disruption.
Mhm.
All these companies know that. All the Mag 7 companies are highly aware of this. They do not want to be left behind. They want to make sure they are one of the four, if not the one.
Mhm.
And they will fight tooth and nail for that. They will not cede this. So I think this will continue for that as well. And the final reason I'll say this will not end is because our economy needs it. I get really upset when everybody keeps saying, well, if you backed out all the AI spending, then,
Yeah,
well,
yeah.
we would actually be negative with GDP and growth. It's like, okay, but you can't do that. We
So,
have spent that money, and you don't know what the counterfactual is.
yeah,
If you didn't spend it on that and AI didn't exist, what would we have spent it on? You don't know.
right.
Maybe we spent it on bridges. Maybe we spent it on other data centers. Maybe we spent it on, I don't know, maybe autonomy's here sooner. Who knows? Like we have no idea where the money could have been spent, but it doesn't necessarily mean that we'd be negative. Now, we do know that is a fact that a lot of our growth is coming because the majority of our growth, if not all of it, is coming because of AI. And so, in knowing that, do you really think that is what anyone's going to allow to slow down? Do you think this administration is going to allow that to slow down? No, no, no. If anything, the opposite. We're going to continue and we're going to ride that pony all the way home. The US economy, AI is equivalent as if the US economy is to Nvidia as AI spend and growth is to the GPU for Nvidia, right? So for us, our GPU as a country is AI.
Mhm.
Nvidia's is their GPU. It's a one trick pony, but damn if that one trick pony doesn't print money. And I think it's going to continue. We got all these forces, all these mechanisms, whether it's regional power contention, whether it's the top companies in the world making sure that they are viable in this new era, or whether it's the US economy, the biggest economy in the world, seeing that all of its growth is coming from this one industry. It's not going to let up. There is no bubble. The people putting all the money behind this are the most profitable companies in the world. OpenAI, not so much. Anthropic, not so much. But all the rest, they are. And they're backed by other people who are making a bunch of money. So I don't know. Randy, to me, everything that's been happening is manipulation.
Mhm.
It's a pullback. It's an opportunity. And in life you gotta take risks. And I hope people took a shot. Today I picked up I didn't pick up, but I sold a bunch of puts on Meta or on Nvidia. If you guys don't know, join my course. But essentially selling puts is very bullish. It's a very bullish position to take. But it's the easiest trade. I'm already up 50% on that trade in less than a day. It was stupid easy. I called it out to my subscribers. I even posted it afterwards on X. It Do not bet against Nvidia. I can't stress enough. We have not started the game. We just got done with the warm ups.
All right. Speaking of not betting against people, I want to also get your take on what do you think is actually going to happen with regard to the terafab and giga solar and chips in orbit. I mean, that was the biggest. To me, that was actually the biggest story of last week. It was bigger than any of the other stories that we've been discussing so far, is if Elon actually builds a terafab and actually, or even buys the chips from somebody else, but then puts these things in space. That's going to be maybe the biggest story of the next 10 years.
Okay, yeah. So this is where, or Nick will be the naysayer here.
Oh, okay, okay.
First of all, as far as building out a chip fab, if that happens, it doesn't even start till 2030. Meaning start production till
Gotcha,
2030.
gotcha. This 100%.
So, in my opinion, too often I meet or talk with these people who are long-term investors, buy and hold investors, yet their demeanor and their rhetoric is very short-term.
Mm.
So I would say, in general, just based on the people that I've met and spoken to, if you're going to invest in Tesla, don't do it for the chip fab. Do it for what's right in front of you: EVs, batteries, autonomy. Like, even Optimus, forget about that. Like, that is enough. That should be more than enough for you. All right? Like, that's a lot of growth, a lot of potential, right? That should easily that alone should be able to get us to $5+ trillion company.
Right,
Easy.
right.
Okay. So yeah, the chip fab, I don't think that we see anything till 2030 that is even worth speaking about. Um, I do hope they do it. I've actually been saying for a long time that I thought they should. It makes sense to me. If what we think the future will be is going to be, then it makes sense, and it adds to Tesla's vertical integration. And in my mind, the idea of building a chip fab, when I first started thinking about this, was back in, oh gosh, 2021, maybe 2022. I forget. But it was whenever we had the big issue with auto chips. If you guys remember,
Yeah, yeah.
Ford had F-150s piled up because they couldn't get any chips. Tesla luckily has great engineers. They just bought any chips they could. They rewrote the firmware for them so that they could use it. Very good move, but to me that posed a risk. And at that point, in my mind, it's like, okay, well, this seems like a pretty standard Elon or Tesla thing to do. Hey, here's a bottleneck. Here's something that could have shut us down and killed us. All right, we'll bring this in house. And they
Mm.
never did that. And they kind of, like, I understand it's very complicated, probably more complicated than I even realized to fab chips. But to me, the idea of this would be to be vertically integrated, again, de-risk from yet another choke point,
Mhm.
and then also um, not just build AI 5 chips, but be able to build out all the chips for your vehicles, right? Every single one that you would need. Like, might as well take all of that in house. So that's what that was my thinking. So I want them to do this. It's not gonna happen overnight by any means. So that's that. The space stuff. This is another one that I'm not. I think it's no pun intended, but I think, like I said, I think they'll do something just to get up there, proof of concept kind of thing. But and there's no challenge, right? I mean, really, like, the servers exist, the racks exist, the means to get up there logistically, like all that. Look, there's no real novel problem to solve there. I'm sure they have to do some things to ruggedize the servers and the racks and all that, and how are you going to host it up? Like, I'm sure there's like some ruggedizedness you have to do for the space, environments in space. But again, I don't think it's a challenge because we've sent plenty of satellites and everything up there. They know how to do this. Is my point.
Right.
But again, I don't think it's as big of a unlock or efficient way to build or power data centers as everybody makes it out to be. Because why aren't they doing it now then? Or if it was
Well,
so
because,
obvious.
well, no, Elon said, he said it isn't going to be profitable to do it until Starship can be the launch vehicle. Even if you put it on, even if you put it on Falcons, it would be too expensive to launch this particular kind of product. So once you've got reusable Starships, then it becomes feasible.
I still don't think it'll be. I'm sure Elon will do it because he can, right? But I don't think you're going to see a bunch of data centers up in space anytime soon.
No,
Um,
well, I think my particular position on it would be that they will do just what you just said. They will put up some in the next 2 or 3 years as Starship is capable of doing it. They might even put some more up. They've already launched that one chip a couple of weeks ago as a feasibility study. So I see them putting more and more up over the next few years. But I think, to your point, I think it'll be 4 to 5 years is when they
yeah.
really start doing it in a
Okay.
major way. Yeah. Yeah.
Then we're aligned.
Okay.
Yeah. And I guess for me at this point, especially with Elon and Tesla, look, I love hearing the bigger picture of things. I'm not investing for the bigger picture like that. You know, it's just it doesn't make sense to at this point, you know. It
All right. All right. I've got so many more things here, and we're
Oh,
running.
let's go. Let's rip them. Let's
So how's it? Oh, I'm sorry. First of all, Elon Musk said the competition isn't interesting in licensing FSD. You have
I
a
saw that.
you have a thought with regard to that whole problem?
Um well, they're not interested in big numbers is what he said,
Yeah.
right? He
Yeah.
said that, they all want to have a small batch essentially just to test it
Yeah.
out.
Yeah.
I'm kind of with Elon. I wouldn't do that because I'd be worried about any kind of nefarious act, of them trying to, you know, somehow flash the neural nets and understand the weights so that they can try to not necessarily reverse engineer it, but there's a lot of proprietary information in there, and you don't want to just give that away. But if you have a licensing deal for millions of vehicles,
Mhm.
well, that kind of locks you in, right, contractually. But if you're like, hey, I just want to try it for 10 or 15 vehicles, like, I'm not giving you this down for you to try to strip it down, try to figure out, what you can figure it out.
Right.
Like that's not happening. And honestly, I don't want Tesla to license this out. I don't think they should. I I think it makes no sense. Um, because for me, there'd be too many caveats. Uh, one, it has to be an electric vehicle.
Yeah.
All right, it's got to be on a 48-volt architecture. I'd say you have to use our superchargers.
Right.
It's like if you keep going down, and then obviously we get a cut
Right.
of every,
Right.
like we get a licensing fee,
Mhm.
but if any of your customers or even you want to put it into the FSD network for
Mhm.
robotaxi, then we get a cut of everything.
Sure.
So it's like if I were Elon, I would say never mind. I don't want to partner. I don't want to license out to anyone. We'll just go at it our own. And I think that's what they should do.
All right, taking a hard right turn. You are very interested. You and I have had some very deep discussions, but this will have to be kind of a lightning round. Housing. Um, Today, there was a tremendous number of economic reports on housing, as well as people opining on housing. What we're seeing is that old people like me are pulling their homes off the market even after they put them on the market. Record numbers of people pulling their houses off the market because they don't have to sell. They're like, no, we'll wait. And they're not gonna sell in a market where the prices are down right now. We've got the bonds just dropped right down to 4%, playing around right at 4% again. So we're probably going to see mortgages back to 6.15. And the last time we saw mortgages down at 6.15, we had a huge rush of people buying homes, and home sales were actually up in October. What do you think is going to happen next?
Yeah, so actually, we haven't talked about housing in a while, Randy, but last time we did was, sheesh, maybe like 2 months ago,
Mhm.
where we actually talked about it. And I told you that I predict that this coming up spring, summer, we will be starting to flip back into a seller's market, not a buyer's market.
We agree
So,
on that, yes.
yeah, so I think the housing market's about to change a lot. And it's through, several reasons. One, as rates come down, that helps. But also, to your point, people are just they're not gonna take less than what they want. We've seen that. Honestly, housing pricing has been pretty resilient. It's definitely come down,
Mhm.
like without doubt, but not. You know how many people have sat there waiting for it to crash to happen? There's no crash. Like, will there be a difference in price? Sure. So we've seen a little bit softening, but you're kind of seeing that stop. If anything, you're starting to see home prices go up. The average home price went up. Even rents are going up in many places. So, look, housing is kind of a very safe place to be right now because there's not enough supply, there's a lot of demand, and as rates come down and make things more affordable, that will unlock more demand. Now, 6% will unlock a handful of demand. 5.5% will unlock even more, and it's not linear.
Yeah.
I think it kind of goes a bit not exponential, but I think it's an accelerating curve uh, that we see as rates come down. So yeah, I wouldn't say I'm bullish on housing, but I think housing is very safe, and I think it's about to be a seller's market again. And
So
this is a guy in Florida
yeah, I
saying
get
this.
it. I get it. So micro to macro zero. No, it's actually macro with the two and the O at the end being a zero on X. He's one of my favorite guys. I love his stuff. Wish he would do more. I wish he would come on my program. Anyway, he says, imagine this over the next few months. He says, number one, quantitative easing ends in 1.5 weeks. Number two, rate cuts get
Quantitative tightening
I said
ends.
tightening. I said easing. It's right there, QT. Ending in 1.5 weeks, rate cuts in 2 weeks. The war ends between Russia and Ukraine. The China trade deal is finished, and these two economies work more together. Crypto market structure bill passes. People get large refunds from Big Beautiful Bill and readjust their filings to increase their paychecks. Fed and Treasury start to perform QE via yield curve control. Earnings continue to accelerate, real earnings continue to accelerate, and jobs data starts to improve and continues for the rest of 2026. And I said, he missed one. He leaves out AI productivity. Sounds like a setup for a pretty good 2026.
So I don't actually agree with the employment one.
You don't think the employment will pick up next year?
I think it'll continue as is,
Okay.
and I
Around
think
4%.
you, even ticking up
Mhm.
for unemployment. I could see it ticking up, and I think this will be one of the reasons why the Fed continues to cut rates.
Mm.
Um, I, I see a lot of rate cuts coming. Yeah. I think we're going to be in a very very easy, very cheap money cycle here soon. But the biggest, I would say, all those things are pretty straightforward right now and obvious. The one thing that I didn't hear him say, and I guess honestly, I haven't heard anyone really talk about this, but I mean, other than myself and my own thoughts when I talk to myself, and my subscribers have heard me say this for a while now. We are year one of Trump is coming to a close.
Mhm.
And year one was about securing the border, extending the Trump tax cuts from 2016, 2017, working to end two main wars: Russia, Ukraine, Israel, and Gaza. He has succeeded. Oh, go ahead.
You're missing one. And reorganizing the entire world economy through tariffs and
No,
policy.
I'm getting there. I'm
Oh,
getting
I'm
there. I'm
sorry. I'm
getting
sorry.
there.
I'm sorry. Okay. Okay.
So he's taking care of three of those four.
Mhm.
Russia, Ukraine might get settled this year, might bleed into next year.
Mhm.
So then the question is, what does 2026 look like? Well, I think 2026 is going to be a rift off of all the tariffs that happened this year. So, to your point, the tariffs this year, which again was part of 2025 for his first year, has put this Trump administration in a very unique position to be able to wield power that they just didn't have before, right? They picked up a few joker cards in their poker hand, so they got a few wild cards they didn't have before, and they almost created it out of thin air. And so now they have those, but those wild cards have to be used soon because there's a deadline on it, and I think that deadline is the Supreme Court. I don't think the Supreme Court will uphold the tariffs at the current levels. Now, I think 15% is the level where there won't be like any issue. And I think you're going to see Trump, and he's already doing this, start to kind of maneuver tariffs down. But I think all of that's going to lead into 2026, which will be defined by one main thing. We'll continue with tariffs. That will continue to be adjusted. If Russia-Ukraine isn't settled, that will continue to be a priority. Deportations, border, all that will still be going in the background. But 2026 will be defined by affordability. And I think that's going to be one of the biggest boosts that you'll see to this economy is that now the Trump administration have their focus on affordability. They haven't had it focused on that up to this point. They've had it focused on tariffs, as you mentioned, on the border, on the two wars that they've been trying to end. They've been focused on everything else. Now, as we're getting to the end of 2025, you can see their alignment is starting to focus on affordability because they also know if they do not solve affordability quick and swiftly, they will pay for it come elections.
Right.
And last thing Trump wants to be is a lame duck president. So between a Trump feeling his back's against the wall, doesn't want to be a lame duck president, clearly the solution, the one hanging chad, the narrative about why Mandami won and all this is affordability.
Right.
I think 2022 is going to be about affordability. You're going to see rates come down. You're going to see things get cheaper. Prices are going to come down. I don't know how it's going to be done. I don't know what they're going to do, but I think they have all kinds of creative solutions that I wouldn't have thought of. And mark my words, 2026 will be the year of affordability. Inflation will be, I'll be surprised if CPI isn't printing 2% by the end of the year or by the end. Yeah.
Are even way under 2%. So I didn't plan for this.
But they have to cut rates even more to stimulate.
Yeah. Right. So then my question is, does the new Fed president change 30 or 40 years of thinking and go, why do we need to have a 2% increase in inflation every year? Maybe it should be 1.5, or maybe it should be 1, or maybe it should be 2.5. Are we gonna maybe address that issue with the new president?
So the 2% came. Yeah, the 2% came in, I think 2012, 2014, something like that.
That's where. Okay.
Yeah, that's where the 2% came from. I don't think that will change because that's a decided upon target, not just in the U.S. but across Fed presidents across the world.
But it's kind of what isn't it really just a tax to be able to keep your deficit from going crazy?
Okay, well, this is where it gets very much into fiat's a scam and all this stuff, and Bitcoin's the way. So I don't want to go down that route in those arguments.
Okay, all right.
I'm more of the mindset that, especially now that we're not on the gold standard or silver standard, it's a feature. It allows the pie to continue to grow. Is the biggest thing. If the pie can keep growing, then that means everyone gets a chance. The problem with something with like Bitcoin is that the pie doesn't keep growing, right? So when the pie keeps growing, yes, you devalue and essentially other people get less spending power, but it allows newcomers to come in and newcomers to succeed, right? So again, this is kind of like a religious debate. I don't think we should be printing money like crazy. I do think a little bit of inflation is good. Deflation is one of the worst things that can happen to any economy. As much as everybody wants deflation, no, you don't. Just go look at history. Deflation is the worst thing you can have. You rather have inflation than deflation all day, every day.
Again,
I forgot where I was going with this.
just because I don't want any confusion among my crowd, there's two kinds of deflation. Deflation, like my television is worth $700. I mean, sorry, would have been $3,000 2 years ago. Now it's 995. That's good deflation because it's technologically driven, productivity driven, as opposed to deflation because the economy is so soft that the demand is gone.
Correct. No, so remember, I wouldn't even call that deflation. I think that's a wrong word to use for that. That's economies of scale. TVs were expensive because the technology is expensive. We couldn't make so many. The hardware to make them was expensive. But as things become democratized and ubiquitous, cost comes down.
But we can have
Competition,
the entire economy do that. If productivity goes up to 6 or 7%, and some people believe it will, because we're already at 4, if it goes up
correct.
to 6 or 7% next year, then you could have the productivity actually driving
But
down all
but
of the
exactly,
costs.
exactly. But to me, there's a difference though. Like to me, when I'm saying deflation, thank you for calling this out because it's very important to distinguish this. When I talk about deflation, what I'm talking about is I don't want to see prices crashing down because there's a lack of demand,
Exactly. 100%. Yeah.
right? We want demand.
Right.
We'd rather have too much demand and not
Right.
enough supply than too much supply, not enough demand,
100%.
because that spirals out of control. And if that happens, that's where you can start to say, well, maybe the fiat system is a Ponzi scheme. Because if, remember, our economy is a living, breathing organism. If it's not moving and if it's not growing, it will start to die.
Oh, yeah.
Like if anyone's ever been in bed for a couple days when they're sick or whatever and not moved, and all of a sudden they start getting like muscle aches and like motion is lotion, right? You want to keep moving. Our economy is the exact same way. That's why when our economy is slowing down or we have a recession or we're not seeing job growth because companies aren't hiring, what do? We print money. We try to stimulate the economy to grow.
Right.
We want that. So but good distinction. Deflation is bad when it's lack of demand.
Right.
Deflation, if you want to use that word, is good when it's because of the democratization of technology, because we are scaling. And when you scale, it's like Costco, right? You can buy more at surplus, which brings down the cost for everybody. So it's a win-win.
All right, let's look at the numbers
Numbers are great.
because we've already gone an hour. As usual, it's over our my plan time, but that's all right. People tend to watch it. Okay,
The
so
numbers are fantastic right
we're
now. That's
starting
all I'm
we're
saying.
starting with Tesla, which in Robinhood is now up $2.63 in the overnights. So sitting at almost 422. So that's a pretty good number. And is there a 420 floor thing that we just ceiling? I think I can't remember.
I,
There's so many now.
no, look, honestly, I would ignore all of that. I would
Okay.
say 420 is kind of it's got nothing to do with 420. It's got nothing to do with Elon, but just right now, psychologically, being over 420 is kind of a pivot zone. Again, I'm not like a technical guy,
I
right? But
got
it's
it.
just,
Yeah,
you can
yeah.
just tell over 420, the stock and the company is more back into an upward trend. Below 420, it's like, okay,
Right.
are we going back to 360?
Yeah, yeah, yeah.
So 420 is kind of right now at that interesting level. And I'll just add in real quick, the market is turning bullish again. And again, I think a lot of this is because, as I said, the Fed would be hawkish and then they would still cut. And that's what's happening. And now you can see the odds are back up to about 80%. And with that, Nvidia, with all this drama today, sitting at 178 now, right? So it made a huge comeback. It was down to 168 today. Now sitting here at 178. Meta, same thing. Meta, I've been talking about, is the most undervalued Mag 7 company, down over 20%. And I've been telling people to buy, buy, buy. I've been buying. And now here we are. We've gone from $580 a share. Now we're at $640 a share.
Wow.
Guys, that's a quick 20 something percent you could have made.
Yeah.
All right. And then just to go back to Nvidia, at 168 today, Nvidia was down over 25% from its all-time highs about 3 weeks ago. 25%. These are Mag 7 companies. This is what I'm saying. Like it's ridiculous. These companies are soaring. Everything's up in the pre-market. It's Santa Claus rally, I think, is about to start. This is my opinion today. Could change tomorrow, but right now, I think things are getting kind of bullish.
All right. And of course, my number one thing that I watch every day is bonds. And the bonds did drop under for down to like 398, 399, somewhere on there, but they're slightly back above four right now at 4.009. So call
Yeah,
that a 4.01. I do now believe that we will go into the threes, whether it's, and stay in the threes, whether
I
that's
agree.
this week, whether it's next week. Yeah.
I agree. Look, once the ADP numbers dropped this morning,
Yeah.
and again they
Yeah.
weren't great.
Yeah.
Yeah, you could see the 10-year just start to dwindle. All the bonds actually, it wasn't just the 10-year. You could see two notes, the 30, the 5. I mean, all of it started to drop. So it's we're the bond market is all you need to look at. You don't need to listen to the Fed. Just look at the bonds. They'll tell you. I've been saying how many years I've been saying this now,
Yeah. Yeah.
Randy?
Yeah. Right.
The bond market has never failed to tell you what the Fed's going to do ever. We don't need a Fed. We really
Yeah,
don't.
100% agree. Oil down, I mean, sorry, up a little bit in the after hours after being down, or the pre-market, 58.19. You and I talk about it every week. That's too low. Natural gas is too high at 442, but it is unchanged in the pre-market. Gold back up again. Okay, Larry says he thinks it goes down, down, down from here. I think I still believe it's not going to be able to hold these levels. We're sitting at 4159 though, up almost 150 points from the 400 kind of breaking point.
I'm conflicted on gold right now. Um, my initial I don't have a really strong opinion on it. Just like I don't really have a strong opinion on Bitcoin. Although I do have a hot take on Bitcoin. We can talk about that in a little bit. Um, my first instinct is to think that gold isn't going to go down
Mm.
and that it is going to go up, especially as we go into an easing cycle. It just seems like it makes sense for gold to go up.
Okay, silver up 1.24. Again, outracing gold right now, 50, almost $52. And copper, which has been buffeted around by the problem with the Chilean mine that was had a problem, but then also many reports that we now have an oversupply. So I guess copper is probably going to stay in a range now from which has been in kind of from 475 to just over $5. The dollar, did you know this? Maybe you already know this, but I've been talking about it for a couple of days now. The dollar against the small basket of currency is only down 3% now compared to where it was when on November 1st of last year,
Mm,
only down 3%, and it's up 3% against the large basket of currencies.
I did not know that.
Yep. So I think this is an extremely interesting point. Okay, now you get your chance to riff on Bitcoin. It is down another 1,267 today at 87,663. Of course, we know that Tom Lee says it could potentially hit 77, but then he believes it will go up and to the right.
Yeah, very easy take on Bitcoin. Um, Again, it's just a thought I had today. I shared it with my subscribers. I'm kind of wondering if we're starting to see a separation, a bifurcation from Bitcoin and the market.
Mm,
Um,
mm,
so I think it's interesting. For a long time now, Bitcoin has told us what's going to happen in the market, and I'm starting to wonder if that's going to change. Bitcoin has a lot of problems. Isn't the right word per se, but there's a lot of issues right now with Bitcoin where there's external forces.
mhm,
Uh, I'll just riff real quick. So, besides the whole spot issue with the USDE that happened, I don't know if you're aware of all that, but essentially there's a glitch by Binance where instead of $1, it says 65 cents. Anyways, besides that, right now you have this this inspection that's happening on whether companies like MicroStrategy should remain a company that ETFs like SPX, I know who owns a index fund, have to own, because it's not really a company, it's more a treasury holding
Right.
company,
Right.
right? And so that might change rules to exclude all of these ETFs from having to own MicroStrategy.
Mm-hmm.
If that happens, then all pretty much every one of these index companies would sell their MicroStrategy. So that's interesting, right? The other thing that's interesting is as Bitcoin goes down, there's no way to hedge Bitcoin. Meaning, when I say that, what I mean is when it's selling off, there's no way to protect other than to sell Bitcoin. So what do a lot of companies do? Well, they will, or what do a lot of people, funds, whatever, they'll choose to short MicroStrategy instead. That way they get to keep their Bitcoin, but they can short MicroStrategy so that if Bitcoin keeps going down, they make money as it goes down, and that tries to offset the loss that they're,
Right.
the paper loss they're taking on their Bitcoin. So as you can imagine, that leads to people wanting to sell their MicroStrategy, which, and then the value goes down. And MicroStrategy is the third largest or second largest holder of Bitcoin in the world.
Yeah.
It's Satoshi, it's number one with 1 million something.
Yeah.
Then it's MicroStrategy is about 600,000. And then after that's BlackRock with all their ETFs. So there's just a lot that Bitcoin has to contend with that the rest of the market really doesn't have to right now.
Yeah.
So it seems like there might be a separation, at least for a little while, between Bitcoin and the market. But that's just my speculation. Time will tell. But it's just something at least to keep an eye on.
All right. So what I want to leave people with is don't forget to DM if you want to be part of the Nick
Oh, yeah.
hour lecture. Well, I guess it's probably not a workshop, the Nick 6 hour workshop.
If you want to learn about options and
And
you don't
that's
know
what,
anything
right.
and you want to be able to understand it, speak about it intelligently, understand what other people are saying, trade it, do covered calls, actually just do trades, send me a message.
And then if you want to survive and even thrive over the next 10 years, then you need to buy the book, buy the book. And with that, I think we should conclude. As always, Nick, thank you so much for coming on. And to all of you out there, it's been great talking to you. But I don't know how to close this off.
We've
Sure.
only been doing this for how many years?
I know, but there's something, you remember it kind of messed up there? So everybody that's watching, enjoy me fellow fitzing around here.